Hey traders, this is Blake Morrow with Trader Summit, and with me today is Bill Baruch from Blue Line Futures. Good to have you back, Bill. How are you?
Doing well. Thanks for having me on again.
It's always great to have you here. I love seeing your smiling face, and I love hearing about your ideas. Matter of fact, one of the things that we wanted to talk about today was crude oil because a few weeks ago, crude was rallying above 70, and you'd mentioned, hey, I love crude oil, but I don't really want to be a buyer here. We've pulled back. We've seen 65 on the continuous contract. Are these attractive levels? And what are you doing with crude right now? What's your strategy?
Absolutely. I think these are very attractive levels. I think stable prices in crude are here to stay. I think 65, we obviously, everybody knows that 65.01 bottom that happened a few weeks back, and we held that through this week. I think that's a great sign in seeing a rebound. Now it's a matter of do we gain $70? The energy inventory levels, we've been seeing continued drawdown in crude, and despite this last week wasn't that enthusiastic, really was sort of lukewarm, if you will. But I think this market has been steady. It's been holding ground very well. And there's a lot of ways to capitalize on the volatility, from that top end resistance down here. And I remain very bullish.
Awesome. Well, what levels, if you got below, like, let's say 65, because just say support gets taken out, are there any levels out there that you're looking at being long? I mean, I know the 200-day moving average is creeping up towards 60. So what are your thoughts there?
Yeah, we've been trading long into this 65 area and started using different option structures and other ways, hedged ways to play it. But from 65, you look below there, around 63 to 63 and a half. There are a couple levels converging. One really being a closing gap that the next session never traded down to that settlement price. And then below there is the 200-day moving average closer to $60. So not to mention it's a psychological area too. So yeah, if you're looking to try and pick a bottom, that's one of the things, and sort of when crude sells off so sharply, it almost feels like a falling knife. You want to know what your backstop is. You want to know what areas can this thing stop. And it's comforting knowing that there are a number of levels that you can lean against and build strategies for.
Awesome. Well, before I let you go, I wanted to ask you a little bit about nat gas. In the trading community, we've heard a lot of people talking about nat gas and the recent run up that we've seen. What are your thoughts on nat gas and the epic move we've seen basically in 2021? Is this going to lead us to a really big rally into the fall and winter months? What are your thoughts there?
Yeah, and that's a great question. I do think that we're going to see natural gas continue to trade higher. I believe the administration in Washington is going to push that cleaner energy narrative. It's already something that's been out there, and it's been a tailwind this year. Whereas as for stocks, they've been below the 5-year average, but within that 5-year range, it's not necessarily a catalyst. But when we are below that 5-year average, it's something that can be supportive. Still, I played it a little counterintuitively more recently, looking for a pullback from this ascent with a very, very risk-defined put spread. Look for a pullback. I'd like to be a buyer closer to 370, maybe as low as 360. But I do think this is something that's going to trend higher for the foreseeable, next year out at least.
Well, that's great to hear. And I'm sure the trading community is going to love hearing about your nat gas strategies. Now, it's interesting. Blue Line Futures, you guys don't just trade futures outright. You guys have some pretty elaborate strategies over there. So tell us a little bit about what you do and how we can get a hold of you.
Absolutely. We like to look at different option structures that we can take advantage of things, measure our risk. Because listen, crude oil, everybody kind of remembers as recently as 2018 where this thing just started selling off and didn't stop. It's nice having a hard stop in there with the futures contract, but then it sort of whipsaws around. That really allows you. What I like to do is build structures where I can see things close through a day and ideally through a week if I can. So some things like risk reversals, you look at different ways to sell put spreads and buy call spreads. It's something we've been able to capitalize recently, especially when you look at a market where something like the managed money in crude oil right now is at well below 300,000 net longs, and where the record is closer to say 500,000 net longs. So there's a lot of room for buyers to be stepping in here. So once it starts to turn, this thing could rally. So risk reversals are a great way to be capitalizing on that. Another thing was we have a commodity trading advisor, another arm of us, Blue Creek Capital, and we have an energy portfolio there. And our trader within that portfolio, he's taking advantage of the micro crude oil futures, which is a new contract launched by the CME. And what I really love, the CME's done a terrific job bringing out micro contracts across all different asset classes. And something for this, he's able to build crude oil positions to the exact size he wants within portfolios, and then use hedging strategies with back month spreads to build against it in by the front month. So it's just terrific being able to do that. And I like looking not only in the futures. We have an investment advisor arm as well with equities. So when you bring up natural gas, one of the stocks I like a lot is symbol LNG, and they're well positioned within the natural gas industry to take advantage of the policy here, but as well, they're a big exporter. So you hear Russia in the news with exporting to Europe, and who would be a beneficiary? A company like LNG would be a beneficiary. So there's a lot of ways to capitalize the market, and we like to stay on top of it. And you can check us out. Our website, bluelinefutures.com, is where you can get a hold of us and look to contact us check out our research, contact us there, our information. We put out research daily, and you can sign up for a trial of a 14-day trial there. So check it out.
All right. Thank you very much. And Bill, you post a lot of things on the Traders Summit site. And if you guys want more information on what Bill does, you can also click down below and get to his other articles that he puts out every day here on Traders Summit. And I'm glad you brought up the micro futures. I mean, that's really opened the door for a lot of retail traders to really be involved in the crude oil market at a much smaller price level, where some of those contracts were a little bit more expensive for some of the average traders, but now everybody can kind of dabble around in crude. So that's great.
It's a better way to use. You can almost look at it as an investment. You hear the debacle with USO last year during March. I mean, it's a better way to be able to just position the underlying contract into the size that you want to be in there.
That's awesome. Well, Bill, thanks again for spending time with us. And remember, if you guys like this type of content, make sure you give us a thumbs up. If you're watching us on YouTube, subscribe to the channel for Traders Summit so you don't miss any of these great interviews. Bill, you're awesome. I'll see you very soon on our next video.
Thank you.
Thanks.